On Saturday, the 15th of August, 2026, one of the strangest financial stories in Europe is unfolding in Italy's Emilia-Romagna region. Extreme heat is not just wilting crops or straining power grids. It is threatening the vaults where hundreds of thousands of wheels of Parmigiano Reggiano are stored as collateral for bank loans. In some of the largest cheese banks, the stockpile exceeds 300,000 wheels. At roughly $1,000 per wheel, that is a wall of cheese worth well over $300 million, and in some estimates closer to $382 million. These are not simple warehouses for finished products waiting for a buyer. They are live collateral for farm credit. If the cooling systems fail, the loan security begins to spoil. That is why bankers and dairy farmers are watching thermostats as closely as balance sheets this weekend. It sounds absurd, but in Italy a heat wave can become a credit event. To understand why this matters, you need to understand a peculiar lending model. Credito Emiliano, known as Credem, has accepted young or unmatured wheels of Parmigiano Reggiano as loan collateral since 1953. A wheel of Parmigiano can take 2 years or more to mature, and during that time a farmer has tied up money in milk, labor, and storage. Instead of waiting, a producer can bring wheels to a climate-controlled vault and borrow up to 80% of their market value. The bank holds the cheese, monitors it, and if the farmer defaults, the bank can sell the matured wheels to recover the debt. For 7 decades this has been a remarkably stable system because Parmigiano Reggiano has a predictable, high-value market. But the model rests on one physical assumption: the vaults stay cool, stable, and dry. A heatwave attacks that assumption directly. What has changed in recent weeks is the intensity and duration of the heat. Europe has been hit by a scorching summer, and the latest analysis suggests the economic cost across the EU could reach around €180 billion. In Italy, the heat is now colliding with the cheese banking system in 2 ways. First, ambient temperatures force climate control equipment to run far harder just to hold the precise conditions inside maturation rooms. Second, energy prices rise with demand, so the cost of protecting the collateral goes up at the same time as cooling systems face more strain. The risk is not that a vault door is left open. It is slower, mechanical failures, power interruptions, or humid air entering when systems are overloaded. Any of those can cause cracks, mold, or uneven aging in a product that depends on consistency. Insurers and bank risk teams are now paying attention to what was once a very quiet corner of agricultural lending. The immediate impact is being felt by farmers and lenders. A producer who has borrowed against young cheese may now face higher storage and energy fees. If the market value of a heat-damaged wheel falls, the loan-to-value ratio can shift. In the worst case, a bank could ask for extra collateral or a partial repayment, which is a margin call in the world of matured cheese. That would come at a terrible time, because many farms are also dealing with higher feed costs, lower milk yields, and stressed livestock in the same heat. For banks, the concern is concentration risk. If one regional vault has hundreds of thousands of wheels and a cooling failure affects a large batch, the loss would not stay inside the cheese business. It would show up in bank balance sheets. The 2026 heatwave is therefore not just an agricultural story, it is a credit story with a very unusual physical asset at the center. Consumers may eventually notice the pressure too. Parmigiano Reggiano is a premium product with a long production cycle. If heat stress reduces the proportion of wheels that pass inspection, the supply of properly aged cheese could tighten. That could push up prices in export markets, including Britain, where hard Italian cheese is a regular purchase. The wider Parmigiano Reggiano industry is valued at around €4 billion, and even a small percentage of damaged wheels can ripple through thousands of producers. It is also worth remembering that these wheels are not just inventory. They act as a kind of physical currency in the rural economy. When their value wobbles, the effect spreads from cheese shops to farm suppliers, transport companies, and packaging firms. In financial terms, the cheese bank is a concentrated, climate-sensitive exposure hiding inside a traditional food supply chain. There is a deeper issue here. The European heatwave is being watched by economists because extreme weather is now showing up in financial contracts that were never designed for it. The EU economy could take a hit of about €180 billion, according to one recent estimate. That comes from lost productivity, crop failures, energy demand, and infrastructure stress. The cheese bank story is a miniature version of that broader warning. A financial instrument that looked safe because it was backed by a physical asset is now exposed because the physical asset is sensitive to climate. This is the kind of risk that central banks and commercial lenders discuss under the label of climate risk, but rarely explain in such a tangible way. It is easier to imagine a solar panel failing than to imagine a bank vault full of cheese overheating. Yet the second one is happening right now. Looking ahead over the next few weeks, the pressure depends on two things: how long this mid-August heat persists, and whether the cooling infrastructure holds. If temperatures ease, the cheese banks will likely continue operating without a major default or fire sale, but the cost of this episode will remain in higher energy bills and tighter margins. If the heat continues, we may start to hear about specific vaults reducing temperatures, farmers moving wheels, or banks adjusting lending terms. The real test will come at the next pricing and inspection cycle, when matured wheels are graded. A wheel that passes inspection is worth full value. A wheel with defects can lose a large part of its value. So the true financial damage from August 2026 may not be visible until those wheels are opened many months later. That lag makes the cheese bank a slow-moving risk, not a sudden crash. So the takeaway is this: extreme heat has moved from a weather inconvenience to a balance sheet problem. In Italy, hundreds of thousands of wheels of Parmigiano Reggiano are not just food, they are collateral, savings, and debt security. When the climate changes, it changes the value of that collateral. For viewers in Britain and elsewhere, this is a useful warning. Climate risk is not always about floods or wildfires. It can appear in a bank vault, in a supply chain, or in the price of a hard Italian cheese. The question is no longer whether extreme weather affects finance. The question is how quickly lenders and farmers can adapt. Right now, a heatwave is testing a system that has worked since 1953, and the result will tell us whether old financial models can survive new weather.